Semiconductor stock investors are pleased in 2024 as major indexes covering semiconductor stocks are up significantly in 2024. Of course, NVIDIA is driving that growth. Its phenomenal increases in revenue and the increasing effectiveness of artificial intelligence is creating booming demand for semiconductor chips worldwide. Interestingly, NVIDIA outsources its manufacturing to Taiwan Semiconductor Manufacturing Company, which also sources some of its machinery from ASML. So it's an interesting comparison. Which one is the better semiconductor stock? Taiwan Semiconductor Manufacturing or ASML? I'll answer that question in this video, comparing these two semiconductor stocks on revenue, on operating margin, on cash flow from operations, on return on invested capital, on valuation, and looking ahead to their 5-year forecast of earnings per share growth to determine which one I think is the better semiconductor stock to buy today. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Starting with revenue, you can see Taiwan Semiconductor has exploded revenue in the last 2 years or so. 76 billion in trailing 12-month revenue. That's up from around 40 billion in 2021 and up from closer to 20 billion in 2015. Taiwan Semiconductor has gained significant market share in the recent decade. It works with companies like NVIDIA, AMD, and of course Apple to manufacture some of the highest tech manufacturing of semiconductor chips in the world. Meanwhile, ASML's revenue has been negative in 2024. Management said that 2025 will be a much better year than 2024, and it's investing accordingly, preparing to have the latest generation technology available for companies like TSM and Samsung and Intel and Micron, which are upgrading to the latest generation technology with smaller and smaller transistors to meet this rising demand for semiconductor chips from the AI industry. ASML has one of the strongest competitive advantages in the highest node, in the highest tech regions, areas of semiconductors. And so companies like TSM, Intel, Micron that I mentioned earlier, it's pretty much the only place to go if you want to get that EUV technology. So its competitive position is very strong in its character. Now, you look at the operating profit margin, and Taiwan Semiconductor is better at this metric than ASML, 42% in the most recent update compared to 31% for ASML. And it's been this way for a decade, where Taiwan Semiconductor's operating margin is about 10 percentage points better than ASML. Similarly, the cash flow from operations to sales metric highlights Taiwan Semiconductor's advantage in this metric, 61%, which is remarkably strong for TSM compared to 20% for ASML. I highlighted that the last year or so has been difficult for ASML, but looking ahead, its prospects are very strong. Management said starting 2025, there's going to be a big rebound in sales and profitability, and you've noticed that tick up already, but it's not really going to pick up until next year, according to ASML management. And this company is excellent with forecasts because it knows well ahead of time what its sales are going to be. Its machines that it sells are very expensive, $100, $200 million each. And so when it gets an order, it knows well in advance with its few customers that it has relatively few customers that can afford a price tag that large. So it's in constant communication with its customers, so it knows what sales are going to be like for next year and probably the year after that. And so management, knowing that, told investors 2025 is going to be strong. Looking ahead, the analysts on Wall Street expect Taiwan Semiconductor to increase earnings per share by about 22% for the next 5 years each year. And remember, these are estimates counted for by Yahoo Finance, bringing together the Wall Street analysts that are following Taiwan Semiconductor stock. But nobody knows what's going to happen in the future. So these are just estimates, and take it for what it is. Interestingly, the analysts that are following ASML stock expect similar earnings per share growth for it over the next 5 years. The difference being just percentage points, right? ASML is 25.55%, while Taiwan Semiconductor is 25.5%. So very close in earnings per share expectations for the next 5 years for ASML and Taiwan Semiconductor. And it makes sense because they're serving similar end markets. They're serving similar end market demand. So it's understandable that their earnings per share expectations will be similar for the next 5 years. Now, when we look at the return on invested capital, ASML has shown significant improvement in the last 3 to 4 years, taking a big lead over Taiwan Semiconductor. This measures how good a company is at taking investor capital and turning it into profits. ASML at 38.6% is far ahead of Taiwan Semiconductor at 21%. But this is coming off a big burst here from ASML. Prior to this burst, Taiwan Semiconductor was ahead of ASML in this metric. So I'm not certain that ASML will hold this advantage from TSM for the long term, or if this was just a brief uptick for ASML, and you can already see this metric coming back downward. It'll be interesting to see. But given that management expects robust growth over the next couple of years, it could be that ASML's profitability and its return on invested capital have had a step higher given this changing dynamic of artificial intelligence and the booming demand created from artificial intelligence. All right, finally, let's compare these two on valuation. Taiwan Semiconductor is trading at a forward price to earnings of 21, while ASML is trading at a forward price to earnings of 24. Similar valuations. Now, one thing we haven't discussed is the geopolitical risk factor, which is strong for Taiwan Semiconductor. It's also evident in ASML as it's getting restricted from selling its products to certain end markets that are deemed to be unfriendly to the United States. And of course, United States holds some sway in terms of directing where its allies allow for sales of this technology that's now becoming more and more strategically important. Taiwan Semiconductor is based in Taiwan, which is a disputed country with China, which claims that it should be part of China and has threatened to take it back and by force if necessary. So there is that heightened geopolitical risk for each of these two, but more so for Taiwan Semiconductor manufacturing. Given all of these factors I've considered, it's a very close call between these two. In my decision, I'll let you know that it was very close. It wasn't a no-brainer where I said for sure this one is better than the other one. So it's a close call, even though if I had to pick between these two semiconductor stocks, I would pick ASML today. But I wouldn't be surprised if, 2 weeks from now, that situation was reversed given changes in the price, changes in the valuation, changes in expectations. So they're very close in terms of attractiveness as an investment. I have each of these two stocks rated as a buy, and I like ASML just a little bit more than I like Taiwan Semiconductor right now. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.